Right, so Hiral, this is the biggest fall for ITC since 23rd March of 2020, and as you rightly mentioned, it single-handedly is pulling down Nifty by over 75, 76 odd points and Sensex by over 250 odd points, and of course it did hit its 52-week low as well in trade today. Now what has happened is exactly that the government has announced an additional excise levy on tobacco and tobacco-related products and health cess, additional health cess over and above GST for pan masala products. Basically, what will happen from here on is, if we take a look at the chart in terms of how this will pan out before and after. Earlier, the structure in terms of pan masala cigarettes and tobaccos was that there was 28% GST plus 22% cess, which will now be 40% GST plus additional either excise duty for tobacco products or health cess for pan masala and products. For BDs, however, things don't change. For BDs, the GST has been brought down from 28% to 18%, and it will stay at that 18%, and no additional levies will take place for something like a BD. Now, what does this actually mean for tobacco companies, right? Basically, what will happen is that manufacturers of cigarettes will have to pass on this cost to customers. That means that for them, volumes will come down, impacting their overall growth. And in terms of manufacturers that don't transfer the complete cost, for them, margins will be under pressure going forward because they'll have to bear the cost of this particular additional levy. Now, what are brokerages actually penciling in? Jeffries says that the tax hike could be over 30% if national calamity contingent duty continues. If this particular duty is subsumed, impact should be well above that 20% mark. And ITC may need to take a price hike of at least 15% going forward. MK on the other side believes that ITC will have to take price hike anywhere between 20 to 40% in different types of slabs. They said that why this has happened is because WHO has a standard of 75% tax being levied on tobacco and sin goods. Until now in India, that tax was around 53%, and post this additional levy, the tax will go up to 73 odd %. And with this, MRP is expected to see an increase from 53% to 63% is what the brokerage is penciling in. So this is the overall view of what this means for ITC, and of course, since it is such a huge whammy and negative for the company, we're seeing the stock tanking in trade today.